Good morning. It is Monday, March the 16th, 2026. We hope everyone had a nice weekend. I hate to keep rubbing it in, but gosh, another beautiful weekend here in Charleston. We spent a lot of time outside. Some soccer. The 5 and 6 year old boys team that Tyson and I coach. I thought we had a good practice. Let's see. My daughter was. We actually went ice skating as well at the ice palace here. So she's moving around okay. And then was my daughter's birthday is actually tomorrow, turning 10, which is crazy. But she had a friend get her some roller blades for her birthday. So. We were out kind of around the park after the fact, so ice skating and rollerblading in the same day. So that was really fun. I also got to celebrate another friend's birthday surprise party. I haven't been a part of one of those in a while, so that was fun. That was fun. So looking at markets last week, kind of the third week in a row of volatility stemming from the Middle East. U.S. markets down, 1 to 2% last week, mostly oil driven. All right, and if you missed last week's video, we discussed that a bit. But this is the war, the conflict. Again, there's humanitarian, political aspects to it, but in terms of markets, this is purely oil, you can really just look at equity markets right now. They're trading almost exactly, just inversely on the price of oil. Okay, so the more technical term for that would be the markets are perfectly negatively correlated. All right, so every time you see the price of oil spike, equity markets mostly go down, and vice versa, right? So this is what makes markets tough, right? Because we could be a ceasefire away from $60 oil again with the rally in equity markets. So we'll see. It certainly puts the central banks in a tough spot because oil is inflationary, and I know I touched on that a bit last week's video, but just because it's such a primary cost of most businesses, it just gets pushed through. Throughout the economy. So, and many central banks have policy decisions that are coming out this week. So it'll be really. I was looking at the economic calendar and just a number of major economies have interest rate decisions this week, including the Fed. All right, so we get a Fed interest rate decision this Wednesday. And just so looking at the inflation numbers from last week too, pretty good. So last month's numbers. So those would be the February inflation numbers, 0.2% month over month, and 2.5% year over year. So really in line, which is encouraging. Also to add on that, rent inflation, which has been a really big concern for many. That came in the slowest increase since 2021. All right, so that was a 3.2% increase. So again, that's encouraging as well. With that being said, the Fed is widely expected to not change interest rates, and I'm certain that they will cite this uncertainty of future inflation given the Middle East war. So we'll see. That's what makes markets. Another week of reviews here ahead. I know I say it every week, but it's been so wonderful seeing many of you and catching up with many of you. Be on the lookout as well for, this is kind of the phase of review where we'll start following up on some action items that we've discussed, right? We have the IRA, Roth IRA contribution deadline, just about a month away. So as most of you know, we like to try to knock those out sooner rather than later. So if we discuss that in your review and it makes sense to do something like that, good chance we'll start chipping away at those in the week or two ahead here. So Questions, comments, concerns, please don't hesitate to reach out to our team. And we hope you have a great week. Thanks.